Well, welcome back to another video. First of all, thank you for even stopping on this video and listening to me talk, listening to me ramble. It really means a lot. And today, we're going to talk about a thing that I did and an options sell that I did and how I made 80 bucks today and might potentially make even more on this one trade. If you like this kind of content, consider subscribing. That way you don't miss any videos in the future. If at any point throughout this video you're like, I would love to learn more, I do have a course. It's for beginners. It's linked down below. Go check it out. Helps out the channel. I greatly appreciate it. And today I did something I didn't think I was going to do, actually. I added money to this account. So we were at like 164-ish or 63-ish, I think, last video. Now we're at 176. Added 12K to the account. And this might not be a permanent thing. I might be temporarily just adding it and then withdrawing it. My idea was I'm going to attempt to live my life funded by me selling options. I was going to do that, kind of ignore the income from my job and see if I could theoretically make that work. And so what I was doing was I was withdrawing some of the profits that I was making or the premium that I was making from selling options and withdrawing it into my bank account. And then the rest of it I would just reinvest into shares of companies. But today I flipped that on its head. I added some money. And immediately, what did I do? I bought 100 shares of HIMS stock. HIMS has been beaten down a bit since post earnings. In fact, if we look at the 1 week, it's down about 10%. The 1 month, it's only down 7.73. But at its peak here, we were at about 70 bucks. And then post earnings, we're down to 46. Even though, in my opinion, though they did miss slightly on earnings, the subscriber numbers and everything else was really, really good. So I'm not too concerned. And then once I got this 100 shares, what do we do with 100 shares, potentially? Well, we sell a covered call on it. And that's exactly what I did. I went ahead and I sold this $50 covered call on HIMS. It expires next Friday. I made 80 bucks right off the bat, and it's already depreciated. So my idea was, if it goes to 50 and these shares get called away and I have to sell them at $50 by next Friday, that's okay with me. I make a quick dollar. We're going to see how much that would actually equate to here in a second. And if not, I keep my 100 shares and I keep the premium, the $80 I was given for 1 week's time, and I can move on to the next trade and the next call option that I decide to sell. So everything's great. You might be saying, well, how much did you make from this trade? Well, I'm glad you asked because I have a web app and it's selloptions.net. You can go check it out. It's open to everyone. It's free. Though I am trying to get ads added to this right now to try to recoup some of the money that I'm spending on hosting this bad boy. But this was originally created, and its main purpose really is to upload a Robinhood statement, see how much you're making from selling options. But some things I added to this were some different tools and calculators. So we have this option selling calculator right here, and we can enter some information, and it can tell us how much we are making from an option mathematically. So if we change the option type to call, because in our case it's call option, the expiration, like I said, that's next Friday. The expected premium, it's not really expected. I actually got it because I executed this trade, but it's a 0.8 per share. So 80 cents per share. The strike price, $50. Number of contracts, only sold one. The cost basis, if we go back to HIMS stock here, if it loads, $46.88 is the cost basis. So $46.88. Let's hit calculate. And then down below, we can see, we already know we're getting $80 in total premium, but here's what's kind of cool. If these do get assigned and I have to sell my 100 shares, a combination of the premium that I got plus the capital appreciation. So what I bought the shares at versus what I sold them at, combined $392 is the total that I'd be making if that were to occur. And just speaking from premium, $80 relative to how much I had to invest into those shares. And then if we're looking at return, the premium I got relative to the strike price of the call option, 1.6% in 7 days' time. I think that's phenomenal. And I did put this here, though I like to preface and give a little disclaimer, the annualized ROI. So if I were to do this every single week, I would get an 83% return. And I want to preface by saying this is like the optimum scenario where I get the same premium each and every week, and they expire completely worthless each and every week. And that's on repeat for a whole year. That's highly unlikely, right? But, even if you get anywhere near this, which is going to be pretty tough consistently for a year, also phenomenal. And this calculator also works on puts, so you can base, how much you're getting in return from put options if you decide to sell those as well. Like I said, go check it out. It's free. Let me know what you think. I got some good suggestions from people in the comments, so if you also have suggestions, let me know. I'm open to anything. And yeah, that's all I really wanted to share today was this one trade that I made, and let me know how you're doing in the comments down below. I hope to see you in a future video.